This is a stock from a very different group and classified really as a penny stock, and is another that we featured and focused on um, analyzing in depth on the stock trading and investing program. The company is called Cleanspark, and the ticker is CLSK. As you can see in the top left, we're on TradingView again, and we're on the monthly chart. And it goes without saying that this is a hugely volatile stock. You can see that back in mid-2018 here, we actually hit a peak of just on $150. And by the summer of 2023, we're down into the $2.20 area and below. I think we went almost down to sub $1, not quite, but almost. Massively volatile, and you might wonder why. And of course, many penny stocks are. As we explain in the program, you have to treat this group with immense caution. Of course, everybody is looking for the 10 bagger. We're all looking for those stocks which are grossly undervalued, perhaps very cheap, and we're looking for them to suddenly meteorically rise from the depths of a few dollars and explode into life and become $10, $50, $100 stocks. Of course, it is possible to find these, but you have to be cautious. You've always got to be aware of the volatility aspect. And the reason this stock is volatile, I actually have the company site here. This is a Bitcoin, very closely associated with Bitcoin. It develops technology, as it says here, for the infrastructure for Bitcoin mining. So it therefore goes without saying, first of all, it is at the forefront of technology. It's very much of the now, but clearly it is going to be associated with huge volatility, not least because Bitcoin itself is also has that DNA, if you like, in terms of how the Bitcoin currency itself behaves. So therefore, it's no surprise to see that the picks and shovels brigade, if you like, that are associated with Bitcoin, are going to experience and demonstrate similar price behavior, if you will. And therefore, you have to treat these with extreme caution, doubly cautious, perhaps, even more so. Not only is it a penny stock in its own right, but it's also associated with a volatile market. So that's the reason I chose the monthly chart. So it's probably more meaningful if we move away from that. And remember, in all these videos, multiple time frames is an absolute essential component of any analysis, whether you're an intraday trader or whether you're a longer term investor. Looking at the various time frames across your time horizon is essential. Let me just scroll this up, expand that up so it's a little bit more meaningful. So now we're on the weekly, and at the time that we recorded the analysis for this, and remember, we're not just looking at the technical picture for all these stocks we looked at in the stock trading and investing program. We're also looking at it from a fundamentals perspective, and not simply the broad fundamental markets in terms of sentiment, in terms of global economics. We're looking at it from the fundamental stock itself, from the balance sheet, from the P&L, income statements, cash flow, and all of that good stuff, which we fully explain, and ratio analysis, which is a key element in considering and analyzing a company and how it is likely to perform. So it's a blend of both the technical and the fundamental picture. At the time we recorded the video for this stock, it was trading around about $4. And I've only got I've got two indicators in here. Clearly, I've got volume at the bottom. And I've also included with this video, I've added the volume point of control. And the reason I've done that, I'll explain that briefly in a moment. But the volume and point of control, this yellow dashed line is the volume point of control itself. If you're not familiar with that indicator itself, what it describes is the associated volume up and down the y-axis here, if you like, the price axis. And the reason it's important is because we look at volume here at the bottom in this vertical arrangement where we're looking at the relationship between a candle and the volume itself, or groups of candles and groups of volume bars. But when we rotate that through 90 degrees, if you like, onto the y-axis, what we're then looking at is the distribution of volume across the various price regions. In other words, where we have concentrations of high volume, as we do at the volume point of control itself here, which is the highest level of volume concentration at that price point, then we expect to see price congest, because volume considered in this way acts as both support and resistance in the same way that we understand price support and resistance. Well, volume can be considered in precisely the same way. So where we have low volume regions here, what we call low volume nodes, we see the price move through there pretty rapidly, because there's very little in the way of volume at this level at $12 and $13 to act as resistance as the price was recovering. But as we start to get up to this level and we start to hit higher volumes here, then volume in this way comes into play as either support and resistance. And the VPOC is the area at which you can think of it as fair value, if you like, where we have the bulls and the bears are in equal and opposite, in opposition to one another. In other words, it's a balance. You can think of it as a seesaw, two people of equal weight on a seesaw. The seesaw doesn't move very much because both are, the seesaw itself is in equilibrium because the weights on either side are the same. And it's a very similar sort of concept around the VPOC. And the reason it's such a powerful indicator is because it tells us when we are at those regions. And of course, it works across all the various time frames. This is not simply a static indicator which remains firmly anchored around this level. Once the price moves on to a fresh level and starts to develop congestion phases, then the VPOC itself will move. But for the time being, it tells us very clearly why we are constrained in this region at the moment for this stock. Why are we oscillating around 17? Well, because we are at the volume point of control. And until we get a strong surge away and develop a trend away from here, preferably on rising volume, which is what we want to see, then we will continue to remain range bound. And the nice thing with the volume point of control is what tends to happen is, I'll just shrink this down a little bit. What will tend to happen is you will start to build ceilings of resistance, platforms of support. As you can see here, the platform of support is around about the $14.50 area. And that then becomes a very key level in terms of either a break to the downside, because we have to be patient, or a continuation of this bullish trend to the upside. And you can set these lines yourself. We have another indicator, the accumulation distribution indicator, which does it automatically. But the nice thing with the volume point of control, as I say, is when you get this channeling effect of price, which always occurs around the volume point of control, it then defines for you areas to set on a watch list for a breakaway from a particular level. In this case, we might be looking at 22, 23, or perhaps 24. Perhaps we want to go to $24, wait for a breakthrough through the $24 region before we might jump into this trend and say, okay, provided it's associated with good rising volume, then that's the point at which I'm going to be interested in perhaps buying this stock or investing in this stock, or perhaps continuing to hold this stock if you're holding it through this region and maybe you've bought down at a much lower price. As I say, when we considered this stock, the price was around about $4. We've got some nice rising volume here, as you can see, into this region. We've run into some congestion here. You can see the wicks to the upper bodies here. So it's telling us at the moment that we're not looking at a continuation. We're looking at congestion building. And at this point, it is a question of being patient and waiting. What we are looking at lower down, certainly when we were looking at this in the program last year, which is when we recorded it, as I say, it was down about $4. And the key was a break beyond this region, around about $6. And that's really what we were looking for. We were looking for a nice trend. We saw an injection of volume here, which is what we always want to see. And when you look at this and you take this as an overall picture, if you like, of volume, if you look at the volume here, and if you now look at how this volume is rising through this phase here, what it tells you is that volume is rising generally, that participation is rising, that the market makers are participating as well, purely based on the volume profile that is generally rising. So for this stock, let's just move down to the daily and see if that gives us any other information. There we go. Just expand that up a little bit. And as you can see, it really just confirms the current status for the stock. Again, we have the VPOC here. It's trading at just below $17, $16.80 odd. And we're looking for a confirmation of breakout to the upside if we're going to look to invest, obviously. So again, it's about being patient. It's very similar in a way to congestion phases where we're looking at accumulation and distribution, those major tops and bottoms. We have to be patient. This may well be a stock that you would have on your watch list. You would have a watch list level for a breakaway to the upside. If it breaks the downside, you're not interested, and you're monitoring the volume the whole time for that opportunity. So an interesting stock, and certainly one we looked at in detail. It has delivered already. As I say, we've moved from single figures from $3, $4. We're now trading at 16. Has it the potential to go back to $150? Who knows? In the fullness of time, possibly. It's not going to skyrocket there for sure. In terms of the next phase for this stock, very simple. It's a question of being patient, setting a level, let's say $24 or maybe $25 if you're a little bit more cautious. And if we see a breakout, which could well be triggered by earnings, we've got earnings coming up fairly soon over here. If that breakout is triggered by earnings and it's the catalyst, fantastic. Provided the volume confirmed and provided we see a breakthrough a region of resistance, which then becomes support, of course, then that becomes a potential opportunity to jump into that stock. Provided, of course, that technical picture, you are comfortable with the fundamentals, do your due diligence, because this business, this investing business, is all about marrying the two of both the technical and the fundamental picture, and then making a decision accordingly. Hope you've enjoyed this one. Lots more to come as always. Thanks for watching. See you soon, and bye for now.